big news right now in the economy and the stock market. We are going to look at what's happening with fragility, and I'm going to bring that in with what it means to you. You came here for the truth, so let me unveil that for you. Today's video is all about fragility, an important topic, something I've been discussing since 2011, and there's different metrics for this. We're going to cover some of those today. I want to show you what's happening with the real economy, though, because the stock market and the economy, yeah, it's not the same. We're going to cover all of that. First, this fears of massive crash on Wall Street after America's top 50 companies see record levels of fragility. And so that doesn't necessarily mean that it's going to crash. And it doesn't necessarily mean that tomorrow is going to be the end of the world. But you got to understand this, because this is the time in which you will take action or refrain from it. And of course, we need to pay attention to all of this. Now, Bank of America saying stock fragility on track to reach its highest level in more than 3 decades among the largest 50 stocks in the S&P 500. What that means is the swings that these stocks have had is generally much larger than the normal swing. So if every day it's moving by, let's say, 0.5% or 1%, and this time it would be triple that. And so this is going on with this other article as well. Measure of a company's daily share price move relative to its recent volatility. It's at the highest in more than 30 years. So just to give you a little bit of context as to what's been happening recently. Yes, the stock market is near all-time highs. Everybody in my Finance Friday knows that I have an indication of when the stock market will move greater than 20% down. And I've been saying over and over and over again that that is not yet the case. The broad market, that is. Individual stocks absolutely can. But it's hard to do that here on these videos. I've been making less and less videos as time goes on because, it's all about the Finance Friday. It's all about getting into the depth of it. And people need to first watch the Compass program that I have free for people. They need to watch the e-course that I have that's free for people. Without that information, it's hard to get that. I see there's a lot of stupid comments that I'll see. You said this is going to happen. You said that's going to happen. Actually, no, I predicted a lot of what has happened, including the absolute bottom of the stock market. But hey, if you see some of those comments, let's have fun with those ones. Why dealers are flying gold bars by plane from London to New York. Tariff fears push JP Morgan and others to stash bullion on passenger planes to sell at record prices. There's different things going on here. I've been tracking the gold purchases, and a lot of the gold is actually getting, repatriated. A lot of the gold is actually getting put into physical precious metals. Usually a lot of it, they never take actual physical possession. So you're buying futures and then they never take physical possession. But now there's a record amount of physical possession being taken to the levels we haven't seen since 2020, when everybody was scared and everybody wanted some gold. This is a very big indication, because the big investors, not you and I, the big investment companies, they hate gold. Not only do they not like to invest in gold, they actually hate gold. And so seeing them purchase it is unbelievable. Okay, we're also getting a lot of emerging markets that are purchasing the gold too. Banks closed more than 100 branches in 3 weeks as closure bloodbath continues in 2025. It's not just the major banks, but of course we're seeing a lot of store closures happening in general. Retail, there's too much of it. Doesn't need to be this much of it. You're going to do a lot of that work online. You're going to be doing working from home in hybrid fashion, although there's a lot that is coming back home. But you got to understand the way that things are happening. A lot of retail is just unnecessary. As buyers fail to show up, more homes are being pulled from sale. So the prices are still super elevated historically. But what they're saying here is that, the market is very stagnant. Why? Because in the United States, mortgage rates at around 7.5% is very high, in addition to the prices being super high. So you have to take the two things into account there. Prices plus. So yeah, interest rates at 7.5 is not that intense, but add on the fact that we are looking at super high prices, It's a bigger burden than what people are used to. In addition, you have people in debt, credit card debt, auto loans, like things we haven't seen in a very long time. I actually covered a lot of that on the Friday session. US retail sales post biggest drop in nearly 2 years amid winter freeze. They blamed it on the cold. They blamed it on the fires in Los Angeles. What else are you going to blame it on? It's not that. Is it maybe that nobody wants to pay $25 for breakfast? US restaurants are cracking under inflation. It's not just eggs, but coffee, oranges, bacon, making life especially hard for diners, bakeries, and brunch spots. It's not just that. It's everywhere. Everywhere you go, the prices are extremely high. And then what do? They add on top of all these things, fees, this fees, that fees. You can't do it anymore, and you're getting your back broken. And so you ultimately spend less. That's what's going on here today. There is a level at which, there's a ceiling at which people just say, I can't. It doesn't mean that they won't go out to eat. It doesn't mean that they won't buy junk food or whatever. It just means that they can't do it as much as they did before. And that's when you have a weak economy. You want people to be going out and spending and having fun and, going all the different services and all of these things, because that keeps the economy going. But when one thing happens, that's like a domino effect. Why there is no relief ahead for used car prices, factory disruptions 3 years ago are coming back to haunt the auto market. They will not stop using this excuse. Well, we had to have people stand 6 feet apart from each other, so therefore 3 years down the road, you got a problem? Come on. It's ridiculous. Ridiculous. This is absolutely nothing but taking advantage of the people. These vehicles, they tell you, oh, there's no margin on these vehicles and so on. But, let's be honest. Come on. Bandit's new demand in Brazil, hand over the Ozempic. So apparently it's a hot commodity. And when just like eggs were now stolen in the United States, when something becomes attractive, it's going to have a black market surrounding it. Okay. Now, the most important the most important two things of this video right here. Number one, the Fed funds rate. Everything is relying on the main interest rate of the United States, which is still significantly higher than many other places around the world. Bond yields are very high as well. What does that do? That keeps interest rates on things like mortgages high. What does that do? Well, that has an impact on the economy as a whole. How many total sales there will be, how many houses trade hands. Think about all the transactions, all the things. Okay, the real estate guy is not getting his cut. The mortgage broker's not getting their cut. The renovation guy's probably not going to do anything because when you move into a new home, maybe, we'll fix this, we'll fix that. None of that is happening. That is a domino effect. Hope you get it. On the Money GPS, we don't just go one level. We don't just look. There's more to it. But you have to wait until the end of the video, okay? Because it has to come full circle. This is not a shallow channel. Okay, I'd rather not make videos if I have to make simple whatever meet Kevin garbage. Look at this. The interest rate. If you look at this, it is still above 4% right now. And when we see what's happening with this, it has an impact on everything else globally. And what else needs to be discussed is the velocity of the M2 money stock. As it was coming down in 2020, this drop off here, how many videos? Oh my God, it's the end of the world. And the entire time I was saying, no. That's not true. That's not true. And subscribers were just like, F you, buddy, I'm out of here. And what happened? Did we experience a deflation or did we experience inflation during this period of time? It was inflation. And what was I saying over and over and over and over again? Inflation. But the velocity of money was going down. I was correct on this because I was willing to be unliked. Because there's other individuals out there, Snyder and whatever, all these other people that will talk about this deflation. And certainly we could have a deflation. But over these past several years, have we seen any deflation? Have we? Please let me know where that deflation is, maybe in wages. But it's ridiculous. It's ridiculous that these people can get away with lying to you. Okay, now what's happening is it's going back up. It's a temporary circumstance right here with this drop off. And you got to factor in the fact that they pumped in so much cash left, right, and center that, of course, you're going to have these periods of time when nobody's spending the money and all these things. Okay. What can we do about it? Number one thing, I want to let you know about the Finance Friday giveaway. Finance Friday giveaway, link in the description. If you can make it, you will get to join into the Finance Friday on this Friday. It will be this Friday. You can get in and it'll be free for you, okay? I want you to see what it's all about. You just got to join the giveaway. If you've already joined the giveaway from before, that's cool. No problem, okay? It's not a big deal. You can apply every single time. Totally free. Click that link in the description. And make sure you use a real email address, by the way, because I have to email you to let you know you won. So don't use a fake email. A lot of people, I email them, they don't even reply. So that's that. I hope you can get on into that. Now, understand something. You have to get skilled up. You got to be able to adapt. And they say the word pivot, but you got to be able to deal with the new things that are coming in. Robots are coming in to disrupt everybody. AI is coming in to disrupt everybody. Is it this year? Is it next year? Is it 10 years? I don't know when exactly, but I know that the companies are willing to invest billions and billions and billions. And do you want to be on the right side of that equation or the wrong side? So you decide what you like and what you're interested in and all these things, but your income better be sourced from different places around the world, or you're going to have some very hard times ahead unless your position is somehow unable to be fulfilled by the robots, by the automation, by the AI that they are actively spending a lot of money on. You got to understand this. We are rapidly approaching a different world, okay? Things are changing, and understand that the companies are already going in this. They are already investing in this. And so we want to be on the right side. Class Central is one place that you can learn about all these skills, okay? There's probably YouTube videos, but most of YouTube is garbage. Then you can go to my free Compass course. It's just a basic financial education program, 20 minutes. You're done. Okay. If you can't spend the 20 minutes, you can't, there's no hope. themoneygps.com/compass. Okay. And what I would advise everybody to do is just adapt to these changes, start to learn something new, start to put your money where you think is right. I talk a lot about that on the Finance Friday. And if you want to get in on that, Finance Friday is available, themoneygps.com/live. themoneygps.com/live. I'll see you there. Don't forget to hit that thumbs up button on the way out to support this channel. And as always, I'll see you next time. Take care.